Good morning. We will pay attention to partnerships today. If we look at the information about Heyday Partnership, for the past 2 years, the information was provided of the capital account, that's closing balances, and the current account opening balances, and the profit for the year, that was 160,000. This profit was calculated after all the normal income and expenses were taken into account. This 160,000 will be taken to the appropriation account to divide the money that the partners must receive out of this 160,000. The partners are entitled to a monthly salary of 4,000 Rand per month. So 4,000 times 12 gives me 48,000. So the salaries account will be debited to increase the expenses, and the current accounts will be credited to show that the money is owed to the partners. Then Day is entitled to a bonus of 10% of the profit. The profit is 160,000, so it means that the bonus account will be debited with 160 times 10% will give me 16,000 to increase expenses, and the current account will be credited to show that the business owes money to them. Then the partners are entitled to interest at 6% per annum. So you will look at your capital amount and work out 6% on the capital. The capital of Hay is 200,000 times 6%. So the money that is owed to him that will be taken to the current account is 12,000. Day increased his capital with 20,000. So on the 80,000 that he had at the beginning of the year, we will work out 6% for the 9 months that his capital contribution was 80,000. And then he increased it with 20,000. Then we will work out on 100,000, 6% for the last 3 months, and that will give me 5,100. So the expense account will be increased with 17,100. Then the remaining profit is shared between them in the ratio 2:1. So we will take the profit of 160,000, subtract the salaries, bonus, interest from it, and determine how much money is left over, and that will be taken to the current accounts of Hay and Day. So the first entries that we've completed to do the salaries, bonus, interest is our adjustments. We debited the expense account every time to increase expenses, and we credited the current account to show that the business owes the money to the partners. Then we will do the closing transfer. So we take all the expenses in connection with the partners to the appropriation account. So we will debit the appropriation account. To close off all these expenses have debit balances. It means that we will credit all the accounts with that figure. Then we take the total profit and we subtract this 129,100 from the 160, and we see that there's 30,900 left over. All the money must be distributed between the partners. So the 30,900 we will share according to their profit sharing ratio. That's 2/3 and 1/3. And Hay will get 20,600 and Day will get 10,300. So the amount on the debit side, when we take the figures to the appropriation account of all the expenses and we divide the profit, those two must add up to the total profit of 160,000. We will transfer the drawings of the two partners to the current accounts to close off the drawings, and then after we've completed the drawings account, we will balance the current account. So when you have to do the journal entries, first of all you will do the adjustments. So you will do an entry for interest on capital, bonus and salaries, transferring it to the current account. Then you will do the closing transfers to close off the expenses to the appropriation account and to transfer the profit from the appropriation account to the current account. We will then transfer the drawings from the drawings account to the current account so that we can calculate a balance in the current account and determine what is the closing balance. Did the partner take more money than he's entitled to, or does the business owe him money at the end of the year?